Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking about single tenant net lease investment properties. We have Nancy Miller here with Bull Realty and Scott Lindstrom with Girard. And one of the things I'd like to ask you guys about, Scott, if you could start us with, is some of the lease clauses and terms you're seeing in these leases, maybe to watch out for, and some of the changes you're seeing there.
I think some of the trends that we're seeing, Michael, are really favored toward the tenant. We're seeing the elimination of percentage rent clauses, and I think that's a factor of when the tenant gets to the end of the initial term, is they really don't want the landlord to understand how well they potentially are doing. So when it comes to them renewing that 5-year option period, that they may want to negotiate that rental increase that goes along with that. One of the other things that we're seeing are confidentiality clauses. Whereas when I go to list a property and sell it, and Nancy's inquiring about what the sales of that store and how it's performing, I'm not able to divulge that information. We're also seeing a lot of tenants, as part of the deal that's negotiated during the lease term, is TI, the tenant improvements, and they want to roll that into the actual rent structure. And what that does from my end is it creates a rent that's above market value and makes that a more riskier asset and potentially harder for me to sell.
What's interesting is all that affects the end value and the math and the whole development and the lease and everything else, because just one of them as an example, if you can't tell the investor the sales, they don't know how well the store's doing, they've got to figure the worst, and it depletes some of the value. So that's very interesting. Well, Nancy, what are some tips to close the show to investors investing in single tenant net lease properties?
I would say a couple things. One is request your due diligence as early as possible, depending on the complexity, your leases, your third-party reports, and things that the seller or the developer may have, so you can feel confident that you understand what you're doing early on and not be surprised. Along with that, make sure if you can, do a site visit as well.
Actually, go look at the property.
Yeah.
Good suggestion.
And secondly, make sure that when you're reading that lease, that it is a true triple net, and that you as the landlord aren't responsible for roof structure, parking lot, and so forth. If you are, sometimes as a new property, there is a transferable warranty on the structure, on the roof, which is good, and you want to make sure that that does come to you. And probably thirdly, if you're really concerned about all these low cap rates that we've been talking about, it may be a great time to look at a really high quality double versus a triple net lease, because it's going to increase your cap rate or your yield on the property.
Right, so you're going to incorporate the operating expenses that you're going to have to pay to maintain the parking lot and the roof in your NOI and your cap rate, but you're going to get a better cap rate because it's just not as clean, so you're going to get a better return.
That's right.
What are some other ways to get a higher return? Is maybe taking the risk of a shorter lease or something like that?
Yeah, definitely. For example, we've got some properties listed that are dollar store type properties that are in the low 8 cap rates, and you say, oh, that's exciting, and I'll tell you they have 5 years, 6 years left on them on the term, and they may not be on Main and Main. They may be in a smaller market, and they may be the smaller format of that store, but it's a high performing store, and the tenant probably is very happy with that, and they'll keep that store rolling forever. So that's one way to skin that cat.
Right, so with that risk of them not renewing, possibly you get a higher return, but there can be some big risks there. I heard yesterday someone bought a single tenant triple net deal with a year left, and the tenant left immediately. They don't own the property a year. I guess from what they paid, they thought the tenant was renewing. So be careful there. Make sure if you're doing some math on the tenant return and you know what you're doing. Scott, Nancy, thanks for joining us. Appreciate your insight today. And thanks for joining us on one of the 47 stations, iTunes or YouTube. We appreciate you. Next week we're going to talk about hospitality. Until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit creshow.com.